Hi there, welcome to Kneppy Invest. Time for another technical update video. I tend to release these videos on a Sunday, but I was actually thinking of not doing a technical update video this week, instead doing a video on step one and whether I should hold or sell that company and just the thought process I go through, because sometimes knowing when to sell or even just holding a company can be the most important decision. More than likely, I will release that video on Monday, the 26th of February. So look out for that. Might be an interesting video because I do go through a lot. I had three thoughts: selling my complete holding in that company, selling a portion, or holding. And eventually, I have come to a decision, and you might be surprised why I came to the decision I made. So watch out for that video, which I should be releasing in the afternoon on the 26th of February. Now on to the main crux of this video today, a technical update video. Typically, I start off with looking at the indices, then I go to commodities, bonds, that sort of thing, Bitcoin, and then I end up looking at some individual companies' charts. And that format's not going to change in today's video, although I probably would like to briefly go through indices and commodities, because to be honest with you, nothing much is happening apart from maybe uranium. And then I will be showing you 30 individual companies' charts, which seems a lot. 29 of which are listed on the ASX, and one company that is listed overseas on the New York Stock Exchange, if I'm not mistaken. And more than likely, you've heard of this company. I'd be shocked if there is a viewer of this company, of this video, who has not heard of this company that is not listed on the ASX. Now, let's start off with the indices. Always start off with the XJO. What has been happening in Australian markets in the past week? To be honest with you, nothing much is happening. That's why I want to go through indices fairly quickly, because to be honest with you, nothing much is happening. In fact, you could say it's just going sideways right now. And you see a little bit of choppiness in the daily chart, but when you look at the weekly chart, the last 2 weeks, we have seen very little movement in the XGO. 1 week ago, it was up 0.18%. This week, down at 0.19%. So flat, almost technically flat, literally flat, technically literally flat in the past 2 weeks. Now, what's happening now? When you look at the daily chart, you can see the index, the XGO, just oscillating up and down below the important resistance level. Now, I don't look at resistance and support levels as such. I view them more as zones. And the reason why the XGO now is struggling and going sideways is because there is a sort of a fight between the bears and the bulls, and no one's winning. It's a stalemate right now between the bears and the bulls. So what the bears are doing, they know this level is a resistance level, so they're more willing to sell, while the bulls are sort of the optimistic people in the room who think, yeah, well, it might go down in the next week or so, but in the long term, the XGO will rise because equity markets over time rise. So they're a little bit more optimistic. The bears are a little bit more pessimistic. They think it might fall because this has been a resistance zone that has been in place for a long time. We can see that just by looking at the weekly chart. This resistance zone has been in place since the middle of 2021. So we're almost talking about 3 years. Now, other indices, XSO has always been a little bit more bearish. And just like the XSO, this is just going sideways right now. So nothing much to talk about the XSO. If we look at the weekly chart here, again, in fact, the XSO has gone down 3 weeks in a row, but only slightly. 0.39%, 0.31%, and 0.21%. Now let's have a look at the American markets. The NDQ, or the NASDAQ 100, has been going up. It's in an uptrend. It had a good week. And the main reason the NASDAQ had a good week is all to do with NVIDIA. So have a look out for that video I did release. NVIDIA hit their results out of the park, and that did drive or fuel the market rise in the NASDAQ on Thursday. It was Thursday, yep, up 3%. Yep, up 3% just because of NVIDIA. Just shows you how important NVIDIA is right now. And that's the whole reason the NASDAQ was up eventually 1.42% for the week. Has been going sideways over the past 3 weeks. Although if you do look at the daily chart, it's still an uptrend, a beautiful uptrend. in the NASDAQ. So the place to be invested in right now is in companies that are listed on the NASDAQ, even in the New York Stock Exchange, because when we do look at the Dow Jones, S&P 500, both of those are in uptrends as well. So the Dow Jones is an uptrend. In fact, all-time high reached on the last trading day of the week. Pretty sure this is an all-time high. Let's have a look at the weekly chart. Yep, all-time high, Dow Jones. So this is 30 companies listed. I don't even know what the 30 companies are, but it's 30 companies. They also have a transport average or something, or transport index. And probably the last one I'm going to show you is a Russell 2000, which is the small cap 2000, and this is fairly similar to the XSO or even the XJO. So a little bit less excitement in small caps, so smaller companies, and also a little bit less excitement in those really mature big cap companies that we have on the ASX. I was going to say the banks, but the banks have been going hard or increasing. What's a good way to say it? They've been running hard the last few months. In fact, I know I'm going to go a little bit off topic here. What's a good company? Westpac. Let's have a look at Westpac. Yeah, the banks are running hard, except Bank of Queensland. Yeah, look at that. This is the daily chart for Westpac. It's up $21 to $26, so about 25 to 30% increase in the past few months. Not sure what's causing this increase in interest in the banks. Decreasing margins. The good times for the banks should have been the last 2 years when interest rates have been rising and the property market has been in a bull market. I think this is the time to not be going all in the banks. But I'm not sure why the banks are running hard. I'm still unsure. I know. That's all I've got in regards to the indices. Now let's have a look at commodities, starting with gold. Still waiting for gold. So sort of in this holding pattern right now. Gold waiting for it to break out above 2060. Close, 2035. So it's close, but we need to see it break out. Eventually it will break out, but when that is, don't know. It could be tomorrow, next week, next month, 6 months from now, 1 year from now, 5 years from now, maybe. I think before then it'll probably break out above 2060 because over time gold price should increase because everything else increases over time as well. What else? Iron ore has been going down. I'd probably actually say that iron ore now is in a short-term downtrend. So it's decreased from $144 down to $125.45. So a little bit more bearish when it comes to iron ore. I own one iron ore company right now, and maybe I should sell out of that because it does look a little bit more bearish. And that iron ore company is Fenix. If you look at Fortescue, there's just too much. I don't understand why Fortescue share price hasn't really been that affected by the decrease in iron ore when this is a pure iron ore play. I just think particularly retail investors just get caught up in the dividend yield, 7.4% dividend yield, P ratio of 9.84. But if iron ore prices do continue to fall, this company will be severely affected. Uranium probably is the big bear right now. And when I say bear, I'm talking about short-term bear. Look at the weekly chart. Down in the past week, down about 5.9%. I'm going to show you one uranium company, Boss Energy. Boss Energy is looking interesting. Now, that all depends on the price of uranium. So this 1 week is just a drop. Now, last time we saw a big drop like this, or you could say we saw this drop in January. There was a drop of 5.9% in January, just like this week. But if we go back to April 2022, we saw a 15% drop in 1 week back then. And then it continued to fall over the next, say, 6 weeks before it started to level off, moved into a nice little support level, which is the moving average channel there, which, that could happen here. So if that did happen, probably the price we'll be looking at would be around about $80 to $85. So if it's not far to fall from here, but maybe continual weakness for uranium over the next few weeks before it starts to see support. Oil, again, nothing much happening with oil. Lithium, I did read someone saying that the lithium people are seeing the market stabilize. And we're actually seeing that in the weekly charts here. Lithium has done nothing in the past few weeks. So maybe it has found some stability. Maybe that's the end. Maybe the bottom has been reached for lithium. Don't know. Copper again, just like gold and oil, nothing much is happening with that. And that's it for the commodities. Now let's have a look at the Bitcoin. Bitcoin, the weekly chart looks pretty good. Daily chart looks really good. We had a nice little run, and now the Bitcoin, the last 2 weeks, Bitcoin prices have been going sideways, which is a good thing. So sort of breathing, consolidating, not a lot of selling coming in after that run. That's always a good sign. So really bullish on Bitcoin moving forward. And again, I've always have to remind myself to include my Bitcoin assets when I value my overall assets, because I always forget. Always forget. And let's have a look at the bonds. 30-year bonds. Oh, we had a big down day on Friday. Down almost 2%. Not sure why. Have no idea why. Haven't been following it at all. But always keep an eye on the bonds, just to see what the bond market is thinking. Some would say that the bond market is a smart market. They know what's going to happen. I'm not sure if that's absolutely correct, but because we have seen ourselves the bond market be wrong over the past few months. The bond market was saying there was going to be like 100 interest rates drops in 2024. That's not going to happen. And that's why we've seen the bond market rally. Anyway, or the bond yields rally anyway. Anyway, that's all I've got in terms of commodities, bonds, Bitcoin, and the indices. Now let's have a look at individual companies' charts. A lot of these charts, you'll notice a similar theme. So pattern recognition is quite important. And the theme I'm showing you today, the common theme I'm showing today, is breakouts on financial news, good financial news. Not all these companies' charts are breaking out. Some of these are interesting for other reasons. I just want to share ideas with you. And my favorite trade is a breakout on good financial news. And I do have a definition of a breakout, which I'll talk about when we look at the first company, which is Bega. Bega Cheese. Now, Bega Cheese moved into a short-term uptrend, probably about late in 2023. Share price went to a low of about $2.50 in late September, early October. And the market, for some reason, started to like this company. Sentiment started to shift. And it seems like when the company released their results, those who became believers in this company were vindicated, because share price really popped up in the 2 trading days after they released their results, and the share price moved above the highs we saw back in August 2022. So share price right now for Bega Cheese is almost at a 2-year high, which in itself is interesting. So my very definition of a breakout, the 3 things I'm looking for is a share price moving higher on good financial news, share price at least a 6-month high, and volume. I want to see increase of volume. So do we have that with Bega Cheese? Yeah, the share price is, well, last time share price was this high was back in June 2022. So we'll say not quite, sort of in between an 18-month and a 2-year high. This was on the back of the company releasing their financial results. And look at the volume. Pretty big volume coming in. In fact, on the day they released their results, share price rallied 13% on that day. Highest volume on an update this company has seen. We'll have to go way back, maybe. Well, I'm still going back. Still going back. Since August 2019, when actually the company, actually even that day, it wasn't up. No, it was right here. Yeah, here. It was a bottom. Share price had just collapsed, and there was some big buying coming on that day. And that big volume didn't last very long. So this is one of the bullish setups we've seen for Bega Cheese in many, many years. So if you do like your cheese, your Bega Cheese, your Vegemite, maybe this is a play for you. Now, a lot of these companies who are breaking out on the back of their financial results, I have not looked at the financial results. I might have looked at the financial results fleetingly just to have a look, but to be honest with you, I've forgotten exactly how Bega Cheese did perform. But the most important thing is how the market perceived the results and any sort of guidance the company did give. And at this point in time, the market is positive about Bega Cheese. So potential breakout play Bega Cheese. Same is true for Service Stream. You might see a little price here, don't know what you call this, a price note. So I am trading Service Stream, and that's when I bought 81 cents back in June of last year. And that was a breakout in itself. So I bought on a breakout. I don't think that was on any positive news, but the share price broke out above, it was a 6-month high. Share price was on a nice little rally. And I was becoming bored with Service Stream because you can just see the share price just grinding higher slowly. And I was thinking, oh, this is taking forever. And this is actually what happens. This is a problem with human emotions. When we see this happen with the shares we own, just slowly going up, you think, oh, there's better opportunities elsewhere. And then all it took was a good financial results from the company, high volume on that day, some good volume on the next day. Now, this company has seen other days where there has been high volume, but average, when you look at the average volume, much higher than normal volume. The share price increased on good financial news. And the last time the share price was this high for Service Stream was back in August of 2022. So we are talking about an 18-month high in the share price for this company. Another good, a pretty interesting resistance level for this company is around about $1.07. Those were the highs we saw back in 2022, sort of a double top there. If the share price can get above that level, $1.07, which is not far off right now, about 5 cents away, that means the share price will be at about a 3-year high. So interesting times for Service Stream. I was at the point where I was almost willing just to lock in a small profit with this company, and now I'm a little bit more willing to hold on a little bit longer. Their numbers were pretty good, to be honest with you, and so I definitely can understand why the share price rallied. Share price up 5.8%, and then a further 1.5% the next day. Now, on the flip side of this sort of breakout, we get the opposite scenario when a company falls through a support level, and this is true for Nine Entertainment Holdings. Share price of this company was trading in a range. You can see this range between about $1.80 and $2.20. It had been trading in this range for about 18 months, since June 2022. And the share price got to the bottom of this range just before they released their results. So this was important. The results had to be good, because if the results were good, the share price might rally all the way up to $2.20. But the results must have disappointed the market, because the market sold off on the shares. Share price plunged 8.7% and fell through the bottom of the trading range. This is sort of a bearish scenario, unlike the other two companies, Bega Cheese and Service Stream, bullish setups. This is a bearish setup. It has broken through a support level, and who knows how much further it has to fall from here. Might not fall much further, but you don't know. Another company that's broken out is HiPages. I'm not the biggest fan of the business model of this company, but just because I'm not the biggest fan of the business model of the company doesn't mean the company can't perform. And this is a classic breakout. Look at the volume, massive volume coming in when the company released their results. Share price has broken out. So again, massive volume, share price at least 6-month high, and on the back of good financial news. And last time the share price was this high was way back in November 2022. So more than a 1-year high. Really good volume. In fact, the volume the day after results was even higher than the preceding day when they did release the results. That's actually pretty good sign. Share price rallied in consecutive days, 11.96% and then 7.28%. So some interest in HiPages Group, a markup 147 million according to TradingView. Sometimes that can be wrong. So beautiful breakout for HiPages. Universal Stores, a company I've been following for a little bit. I thought, yeah, I'm not sure about this company, but this is again a breakout. Company released their financial results. Share price popped up. Share price increased on that day 13.2%. High volume, and it was at least a 6-month high. In fact, last time the share price of this company was this high was back in May 2023. So we're talking about 6, was it now 2? So talking about 9-month high in Universal Universal Stores share price. And this is a fairly similar theme among a few retail companies, particularly the better retail companies. And another retail company is Lovisa. I would say this is one of the best quality retail companies on the ASX. Now, I had a closer look at their results, and even though I'm saying closer, I'm talking about instead of fleeting, I looked at the results for maybe a minute long. And even though same-store sales were down, overall sales are up, because this company is increasing their store counts quite rapidly around the world. And that's one reason I'm bullish about this company. And if we get to the scenario where they can increase same-store sales and maintain the increase of stores around the world, blue sky is potential for this company. So there was a little bit of bullish or bearishness in this company over the past year or so. But the important level for Lovisa, and it's quite obvious what the important level for this company was, is about $27. And why that's important? Look back in 2022. November, share price got to $27 and pulled back. Got to $27 again in January 2023 and pulled back. Got to $27 again in April 2023 and pulled back. So obviously $27 is an important psychological level for this company. And if the share price moved above $27, those psychological scars in place would be healed immediately. A great thing about this is day traders, a lot of traders, even some investors would know $27 was an important level. And if they saw the share price get to $27, they might sell. So what happened when this company released their results? And this, I've seen this a lot. Share price rallied to just above $27. So you would still see some selling, but the share price remained, for the most part, above $27 and closed on the day when they released their results at $27.78, which means this was a potential breakout. So those who would be willing to sell their shares at $27 just thought to themselves, well, maybe not now. This is a breakout. And then the next day, it was confirmed. I believe this is a breakout. Share price rallied another 6.8% up to $29.17. Next thing we want to look at is volume. Some pretty good volume coming in, but not extreme volume. So this is, again, a classic breakout, even though same-store sales were down, if I remember correctly. Pretty sure they were down. So another classic breakout, and I'm pretty sure the share price of this company is now at an all-time high. Pretty sure it is. Yeah. For full disclosure purposes, I should be mentioning what companies I own. So I'm trading ServiceStream, and I do own Lovisa in my longer-term or quality portfolio. A quality company, one of the highest quality companies on the ASX, in my opinion. Definitely the highest quality retail company on the ASX, just my opinion. Another company I own in my quality portfolio is PWR Holdings, a company I am bullish on for the long term. And this is another breakout on the back of financial results and some pretty good volume coming in as well. A little bit of weakness over the past few years. I think they released their results last February. The share price actually dropped 13.8% on the back of that. So you can just see how sentiment can shift in just 1 year. Now, those results, I bought in just after those results released, if I can remember correctly, because I went, oh, share price dipped. I'm going to buy this quality company. Share price continued to fall. Maybe I should have bought some more back when the share price fell below about $9. But the results were good. I'll give the company that. But the share price did not break out when the company released their results on that day. Even though share price rallied, what was it, 11.95%, we didn't see the breakout to the next day, where the share price rallied another 6.2%. The reason that's a breakout, if we go back to the last time the share price was that high, which was in February last year, so 1 year high in the share price, it's breaking out above that. Now, you could say that maybe the share price breaking above those highs we saw in September is a breakout, but that was less than 6 months ago. That's why, based off my definition, this was not a breakout. We need to see the share price get above $12.50. You could have your own rules in terms of breakouts, and you could say, well, maybe a 3-month high, and that's all it's needed for a breakout, and maybe the share price of this company broke out of the day before, when I said it broke out. So you could have your own rules. There's no set steadfast rules in place, and that's a great thing about technical analysis. You can develop your own rules for whatever sort of trading strategy you want to put in place. Okay, so PWR Holdings, Codan. So as you did sell Codan, my Codan shares, that was a mistake. Based off this. So obviously a little resistance level for this company was around about $9. Actually, that line is not straight. There it is, now it's straight. So around about $9. We can see the share price of Codan got to about $9 back in August 2022. And look, it went, well, plunged after that. Share price got to about $9 in November last year and then fell. One of the reasons I bought this company was a breakout back in April 2023. You can just definitely see that breakout here. That was almost a 9 or 6 month high. Sometimes I will be a little bit more flexible with my 6 month high. This was a case. So the share price broke out on the 11th of April, and the last time the share price was that high was about the 11th of October. So right on a 6-month high. So if it was like a 5-month and a 25-day high, I will be a little more flexible with that particular rule. But this is a breakout. This is the very definition of breakout. Codan share price on the day rallied 16.6%, pretty good volume coming in, and the share price continued to rally. Last time the share price was this high for Codan was back in September 2021. So we're talking about a 2.5-year high for Codan. Traditional breakout. Well, traditional Kneppy Invest breakout, or Kneppy's breakout. Anyway. Okay, next company is Boss Energy. So we've seen a little bit of weakness in uranium prices, and we've seen a pullback in Boss Energy. Share price of this company has fallen from about $6. In fact, the high was $6.12. So it's gone from $6.12 to $4.58. Now, last time we saw a little bit of a pullback, share price moved towards the 150-day moving average, which is this solid blue line, and we saw some support there. Share price of Boss Energy is moving towards that line right now. So a potential buy the dip opportunity for Boss Energy, particularly if you are bullish on the future of uranium. And this could be a little sneaky buy for those, again, who want to buy some Boss Energy shares. So who knows? I think it all depends on uranium prices. If we see some stabilization in uranium prices, now could be a good time. I would be bearish on uranium or Boss Energy if it fell below that level, which is the previous lows. So we're talking about 379 or something like that, or 380, we'll say, which still has a fair way to fall at that level. This could be a double bottom. So if the share price falls to 380, then share price bounces, or the share price could just bounce because we know that the last low was 380, and that is a support level. So 380 would be an interesting level, really a possible sneaky trade, because you buy it, say, 382 or so, hoping there's going to be a bounce, and the share price falls below 380, you just sell and take a small loss. Another non-breakout company is Reliance Aviation. This is just a potential support level, buying a company at a support level. I wouldn't say, you could say this is a strong support level. Look at what the share price has done at 275 since June of last year. So it's reached this level 1, 2, 3, 4, 5 quite a few times in June, July. Hit this level back, or just above this level, back in November and December last year, and then again on the 14th of February before it bounced. And now it's right on this level again at 275, and some big volume coming in as well. So when I see the big volume coming in, when the share price of a company is at a support level, that means there's someone taking interest at these prices. And it could be just value investors, or could be just a fund manager thinking there's some good value at this company or with this company at 275. So would I trade Reliance Aviation at 275? You betcha. And what I'll be doing is just waiting for a little bit of bounce. Say share price bounces to, say, $2.3, take my 10% profits. That's all I'd be willing to do. But not necessarily. Even though I say I could do that, could see myself doing that, doesn't necessarily mean I will do that. But Reliance Aviation is at a support level right now. Now back to the breakouts and Jumbo Interactive, a company I've never owned. And this is, again, another definition, my definition of a breakout, a pretty obvious one. We saw the share price of this company get to a high in January 2023 at about $16.20. It got to $16.20 on the 28th of August of 2023 and then fell away. Got to this level again on the 19th of February 2024 and struggled. So resistance and support levels work. You can just see it play out, not only in this company's chart, but on many other companies' chart. It's all psychological, And the reason why breakouts work is because, again, those psychological scars are healed almost immediately when the share price of a company breaks out. This company released their financial results on the Friday. Share price rallied 9% on high volume, pretty high volume compared to the average. So this is a traditional Kneppy breakout. Kneppy's breakout, yeah. Now it's a company I do own, and that's Aussie Broadband. So I own this in one of my portfolios. I forget which portfolio. It could be my small caps portfolio, but eventually I can see myself transitioning this company to my quality portfolio. And I am also trading that. So I bought some trading shares back in August 2023 on another breakout. Say there's a breakout on that day, and pretty obvious to me, based off my definition of a breakout. Now, funny enough, we saw the share price fall In fact, the share price fell below that breakout level for a brief period. So some people might have panicked and sold, but I would like to get confirmation. The share price rallied. Share price got to about $4.15 and then fell away. It tried to get above $4.15 in October, fell away. Tried to get above $4.15 on the 8th of February, that fell away. And then what happened? On 23rd of February, when the company released their results, share price rallied 19%. Not only does the results help in this sort of scenario, but the reason share price rallied on this day and broke out was because the company issued an upgrade. And whenever a company issues an upgrade, you're going to see the market excited. And that's why the share price of this company broke out. Last time share price was this high was back in April or May 2022. So no concerns about this being at least a 6-month high in share price. In fact, we're talking about an almost 2-year high in the share price, and definitely sentiment in this company has shifted. Last thing we want to look at is volume. Highest volume on an up day since 2022, so 2 years ago. So another traditional breakout. McPhersons Limited. Never owned this company. It's had an interesting history. Look at the weekly chart. So a lot of excitement in this company back in 2020. Share price got to a high of 325. And then this company went through some serious problems in late 2020. So the share price dropped from above $3 all the way down to below $1 in about 4 months trading. And the share price moved into a well-defined downtrend. But possibly that downtrend is coming to an end because the share price possibly is breaking out. So I put all these lines here. So it looks like there was a double bottom at about 38 cents. And then after the first bottom, the share price rallied really quickly. Not sustainable rally. Share price went from 38 cents to 60 cents in less than a month. And then the share price went back down to 38 cents and rallied off that 38 cents back in November last year. They must have released some good news on the 28th of November. So that's around AGM time. Share price on that particular day went up 28%. Not really a traditional breakout because the share price was not at a 6-month high and the volume wasn't that huge either, but the share price has continued to rally. Now, the share price got to around the previous highs we saw in August. You can see how much it struggled to get above those highs. So again, just resistance levels. So resistance because there's some shareholders who bought in at those levels, but also a psychological barrier. Again, psychological scars can be healed if the share price breaks out. And it seems like the share price might have broken out. Share price rallied 9.7% on the day they released their results. It did pull back a little bit the next day. In fact, it was flat, but the share price did get to 66 cents and then pulled back. Probably the only concern I would have is the lack of volume. So I didn't see big volume coming in, so that would be a small concern. Now, market cap of this company is only $89 million. So have a closer look at this company's financials, but share price had been a long-term downtrend. You can see it quite clearly here as we zoom out a little bit. And I think this downtrend has now come to an end. Whether I would buy this company, it all comes back to conviction, and my conviction around this company is fairly low. SG Fleet. Now, no, not Ventia, SG Fleet. I've owned this company on and off over the years, just like the other novated leases companies. So we're talking about McMillan Shakespeare, Smart Group, Fleet Partners. There might be one or two, so definitely 4. And all these companies' charts, they look interesting. McMillan Shakespeare just went on a massive run. So MMS. So their results must have been good. I could have included McMillan Shakespeare in this conversation as well because the share price has broken out. I don't know what happened in August last year when they released their full year results. Share price rallied big on one day, 13%, but then the next day fell 10.5% and then continued to fall. Anyway, well, Smart Group chart looks really bullish. Beautiful chart. And Fleet Partners, pretty sure it's FPR. Chart looks pretty good as well. Yeah, so Fleet Partners, Smart Group's chart looks really well. P ratio for all companies is different. Smart Group's like above 20. For all the other companies, Fleet Partners, McMillan Shakespeare, and Smart, and what's the other one? SG Fleet. The P ratio of all these companies are just above 10. So for Fleet Partners, it's 11.2. This is according to TradingView. For SG Fleet, it's 12.2. So why am I showing you SG Fleet? Just look at the share price it is right now compared to the 2 previous highs. 2 previous highs, August 2022, August 2023. So this company share price reaches a high in August, last 2 years, and now we're in February, so around the release of financial results. Now, share price has rallied on the back of their financial results. They released those results maybe on the Wednesday, and look where the share price is. Share price just got above the highs we saw. Now, the most recent high was in August, so we are talking about a 6-month high, or just shy of a 6-month high for SG Fleet. Now, I wouldn't be surprised to see the share price flounder here and go down again. So, yeah, I don't know. We did see a little bit of volume coming in. That's could be good, but my conviction on SG Fleet is probably low right now. And I think one of the reasons why my conviction is low, just because I have traded this company in the past, and this company has frustrated me. It's really frustrated me because you can see a little bit of volatility in the share price. You don't really see it in the chart. And usually the volatility is on low volume. So you could say it's liquidity traded, but yeah, not my conviction on this company is not that high. Now, another company I do own is Ventia, and this probably my small caps, not my quality. I wouldn't necessarily call this a quality company, but one of the reasons I actually bought this company was I thought it was cheap. I bought it at a P ratio about 11, or maybe it was 10, but this company was growing. I was like, oh, what's the market seeing that I don't see? So this was just a value play. I don't do many value plays. On occasion, I will, and then I'll just hold them. Dividend yield is 6.25%. The P ratio right now is 16.8. But you can just see what happened. So this was a breakout a few weeks ago, or a few months ago, in fact. Share price, you can see without doubt, the share price had a resistance level at about $3.10, which was the highs in September 2022 and again in July 2023. And when the share price moved above that level, that would be a good sign. It moved above that level in December 2023 and just remained above that level. The share price went sideways. That's not a bad sign. That could be a good sign. Not a lot of volume. And then the share price started to move up. So I was looking at the share price or the chart for this company. I was like, share price actually, the chart looks pretty good. So I'd been holding this for a while and the chart wasn't looking that good. But I was only in this company because it looked cheap and I thought I'd probably get a pretty good dividend yield. And eventually I might get good capital appreciation. So share price going up. So I'd get the added benefit of a good dividend yield plus share price appreciation. And finally, we are seeing that. So sometimes patience does work. And I have not looked at the results for this company. The market liked it. You can just see 3-day response. Share price has rallied from about $3.30 to $3.81. So we're talking about 15 to 20% rise in share price. Not quite 20% just yet, but nearly 20% share. I should have a look at some of these results soon. So that's one thing I'll start doing is have a look at results. I've already started it with a few companies, but on force, I'll look at these results. I'll probably start with the companies I own, to be honest with you. Austin Engineering, interesting story. So back in August last year, or actually May last year, the company released a profit downgrade or something. Share price plunged about 20% in one day. Share price kept on falling. And then the sentiment just shifted in late 2023. You can see the share price started to move into a short-term uptrend. And then the company released some positive news in January, but the share price really struggled to get above the hold highs we saw back in April last year. You just see the share price going sideways and struggling. When the share price got to that old highs of about 40 cents, the share price just couldn't do it. Just couldn't get above that level. And then finally, on the 22nd of February, the share price rallied above that high on okay volume. And then the next day, the share price rallied again. So this is a breakout. I'm not sure if the company released their results. It says, according to this, next earnings report in 2 days, but this is a potential breakout for Austin Engineering. Interesting chart. Not a breakout is Acrow Limited. I've been following this company for ages. I've never bought shares in this company, even though the chart looks beautiful, beautiful uptrend, and the share price has rallied off. This is fairly similar to Ventia in terms of the share price has rallied day after day after the company released their results, and the share price is at an all-time high. Acrow Limited, $1.20. Would you be willing to buy shares in this company right now? On the theory that the share price might pull back. So if you're just waiting for the pullback, which may not happen, by the way, maybe you could buy in $1.10 on the pullback. So sometimes the pullback doesn't happen. So yeah, just Yeah, maybe. I think it will. Who knows? Orica. Okay, yeah, well, obviously why I'm showing you this chart. Share price up to a resistance level, a pretty strong important resistance level, because we're talking about 1, 2, 3, 4 times in the past, the share price of this company tried to get above $17 and it couldn't. So we're talking about 4 times in the past 2 years. And the share price is right on $17 right now, $16.93. So it's at a resistance level. So whether the share price falls below this resistance level remains to be seen. Now, if the share price breaks up above $17 on some good strength and remains above this level, this could be a breakout, sort of a non-traditional Kneppy's breakout when we don't see. Did the company release results? I'm not sure. But maybe the company didn't release their results, and this could be just a technical breakout where the share price is rallying and has moved above a resistance level. So keep an eye on Orica. Just look at the financials now. Market cap of 7.73 billion. I can't tell you what this company does. Okay, Breville. So one thing I have seen this financial result month has been instances where company share price has fallen significantly on the day they release the results, and then their share price rallies the next few days. And I actually have made a bad decision on the back of that. Mass Group, I sold out on the day because the share price fell. Should have just kept on holding because the share price has rallied and is back up to where the share price fell the day before they released the results. Same thing happened with Breville Group, a company I own in my quality portfolio. So I don't really follow what happens to share price movements of companies I own in my quality portfolio because I don't really care. I'm holding these companies for the long term. And I was interested to see the share price actually fell by 8.5% on a huge volume the day they released the results. But look what happened the next 6 days trading. Share price has recovered back up to the levels. So there would have been some people selling on that day. In fact, the share price would have been down about 15% almost. Share price fell to $23.50 almost. The low was 23.72, and then it rallied during trading and it's kept on rallying. Yeah, so sometimes it's a tricky situation because if you look at another company like Data3, the share price kept on falling after that initial big drop. So it dropped again. Pro Medicus is another case where the share price kept on dropping, although Pro Medicus is a little bit different. Again, share price dropped in 2 consecutive days, and now the share price is rallying. In fact, the share price bounced off the 150-day moving average, which has been a support level for this company. That would have been a really good trade, possibly. I wasn't really following again that company too closely. Okay, Reliance Worldwide, another back to breakouts. Reliance Worldwide Corporation. I've actually owned this company in the past. And this is a traditional Kneppy's breakout. Financial results, high volume, share price at least a 6-month high. In fact, for Reliance Worldwide, we're talking about a 2-year high right now. I had a fleeting look at their results, and on the numbers alone, the results didn't look that good. So there must have been something else in the results, maybe an outlook from the company's management, or maybe a trading update, how they've been performing in the first month of, or first month or so of 2024, because something definitely excited the market when it comes to Reliance Worldwide Corporation. Look at that rally on pretty good volume as well. Let's go to a company I probably will never trade, but this is all about me sharing ideas. This is way to that. I had a quick look at what caused this little bit of excitement in this company. Something to do with AI, something like that. I think they said no other company in the world is doing what they're doing, but doesn't mean it's going to lead to any financial returns for this company, because this company is small, markup $16 million. But you can't ignore the volume, massive volume coming in this company, massive increase in share price. There was one day where the share price rallied, if I can get it right here, share price rallied 60% in one day on the highest volume day. Share price has pulled back, fell 12.9% on the Friday. This could be just some profit taking. But yeah, this is a potential breakout. I'd probably call this a non-traditional breakout because it's not on good financial news. It was an announcement the company did release that did cause excitement in the market, but My definition of a breakout on good financial results. Good financial results is the key word there, not a good announcement, a good financial results. I want to see numbers, and I want to see the market see numbers as well, because that does lead to a sustained breakout. This sort of breakout may not be sustained because the market could become bored with this company fairly quickly if they don't release further announcements supporting this breakout. But the volume is interested me. The market has become interested in this company. I should put down, I'll do research on this company. In fact, I've already written down WTV, do for the research. About 7, 8 companies to go. Sonic Healthcare, I did see a comment in one of my videos where I have not done a video on Sonic Healthcare. Well, I'm not going to do videos on all your suggestions, by the way, but Sonic Healthcare's chart does look interesting to see where the share price just bounced off a few trading days ago. Well, it's not surprising because the share price got to $28.50 and bounced quite, I won't say violently, but some good volume coming in. So why $28.50? Look where the share price got to back in February 2023, so 1 year ago, again in October and November 2023, and bounced off that level. 28.50 is a support level for this company. So it's not surprising that the day after the company released their results, the share price bounced off $28.50. In fact, the share price fell below $28.50 for a short period of time, fell to $28.11, but there was some pretty good buying coming in after the share price fell below $28.50. And this, to be honest with you, this company wasn't on my radar at that point in time. I could see the share price rally back up to, say, $32 or so. So you could get a 10% return in this company and then really struggle to get above 32.50 because you can see the share price was going sideways between 31 and 32.50. So a lot of resistance in that zone. So this could be just a sort of a trade where you just want 10%. Woolworths, this is definitely not a breakout. This is probably the definition of the complete opposite. Some interesting happenings with the CEO of this company. Apparently he was in an interview and the interview didn't go well. He stormed off or something. To be fair, we live in a capitalistic society. Woolworths and Coles should be allowed to make profits. If the government has allowed a duopoly, then they should be allowed to take benefits. They should be allowed to benefit from the duopoly and have good margins. They should be allowed to profiteer because we need more competition. And the way we get more competition is if other competitors see these companies have pretty good margins. Oh, we want a piece of that pie. And that's how you increase margin. Now, maybe there are some government regulations that really stifle competition in this space. I don't know. So that could be a concern. But we should not be concerned that these companies are profiteering, price gouging, because we're living in that society where these companies should be allowed to do that. They should be incentivized to do that, because if they're incentivized to do that, it leads to more competition in the long run, and more competition will eventually be beneficial for all of us. Maybe not for Woolworths and Coles, but for all of us, it should be beneficial. Anyway, these companies exist on low margins. Now, why have I included Woolworths in today's video? Share price has taken a pretty massive dive. Share price reached a high of above $40 back in June last year. Now, I don't know why anyone would buy this company at these levels, particularly at $40, because the PE ratio of this company is stupidly high for a company that's going to grow at snail pace. Now, you could say and argue that maybe the margins will increase, but we do see a little bit of pressure on these companies. So even though I don't agree with it, there's still that pressure. So the margins more than likely won't increase all that much. But why could you be interested in this company? Share price is falling towards $32. $32 is an important resistance or support level for this company. It was the lows we saw back in November 2022. If it falls below $32, that would be bearish. Now, possibly value investors might come in. P ratio of this company, we don't know. TradingView doesn't have a P ratio. Maybe they were loss making. Let's go look at the annual results. So this company had consistently has a profit between 1.6 and 2 billion. So just say this company makes a profit of $2 billion. A market cap is 39.88, which means a P ratio, and me being not conservative, being a little bit bullish, P ratio of this company is still 20. That's way too high for this company. So there is potential that there are going to be multiple contraction. You guys see a P ratio 4, a lot of volume coming in as well. So there's a bit of negative sentiment around this company. So $32 is an important level for Woolworths. If it falls below $32, watch out. When would I buy this company? If the share price falls to $16, P ratio of this company will be 10. That's when you buy these companies, when there's good value, not when the P ratio is 20. It's just my opinion. Clearview. Now, I've included Clearview because looks like the share price or the chart or the share price, whatever you want to call it, is moving into an uptrend, and the share price is now at least a 6-month high. In fact, it's at about a 18-month high. I don't know what Clearview do. Markup is 386 million. Dividend yield is 7.3%. It has price earnings ratio of 117, which I think is probably. Now, if you look at the annual revenue for this company, it's been dropping the last 4 years. Income last year was 17 million. So obviously, semi-annual revenue, yeah, they had a net loss in the first half of financial year 24. Okay, so I'd probably want to, maybe not. I was going to say maybe I would want to know a little bit more about this company, but when you're trading, I do know some traders have no idea what a company does and they still trade the shares in the company. I have trouble doing that. I still like to know what a company does because it does change your conviction on a company. If I was bullish about the long-term future of this company, I'd probably be more willing to trade this company, to be honest with you. So I might have to do a little bit more research in Clearview Wealth. What do they do? Are they insurance? Non-operating holding company which provides wealth management, life insurance, and integrated financial services. Okay. I never had a look at Clearview, but the chart does look interesting. And the other thing is we've seen these little spikes in volume, which could be fund managers taking position, like cross trades, that sort of thing. And last time we saw big volume was when the share price was higher. When the share price fell, we didn't see much volume coming in. Okay. Humm Group, 6 companies to go. Humm Group, this is an interesting chart. Share price broke out in January at about 50 cents. Share price went on a tear, went from 50 cents all the way to high of 72 cents. Wow, great times. Not only that, the share price tried to get above the highs we saw, that high there, we saw in January 2023, so 1-year high. So the share price actually got to 1-year high, and then the company released their results. Market hated it. Share price fell 19.4% on the day and kept on falling the next 2 days. Pretty big volume coming in. You can see really big volume coming in just before the share price broke out. Now, the share price has bounced off 50 cents twice in the past few days. So 50 cents could be a support level for this company. Share price right now, 52 cents. So possible sneaky trade here on the thinking that maybe 50 cents now is a support level and maybe we'll see a bounce now. So a possible trade when it comes to Humm Group. Now, you could actually argue that Humm Group is sort of like in that buy now, pay later space, also prepaid cards, I forget what they do, all that sort of jazz. You could say that their results are not a good sign for Zip, because Zip's share price is still on a tear. A company that is beloved by institutions around Australia. I don't know why this company is beloved, or this is one of the greatest companies on the ASX, that sort of thing, is IDP Group. I'm not a big fan of education companies, to be honest with you. And when you look at the chart, it's an ugly looking chart. Share price, $32 back in February last year. So share price of this company has fallen from $32 to $18.55. So it's almost halved in 1 year. So obviously something negative is happening to this company. I don't know because I don't follow this company too closely. And then when they release their results, share price has taken a plunge. Massive volume coming in. Now, this massive volume in the last trend day of the week does make me think that maybe we might see a bounce. Now, when we look at the weekly chart, this is important. So when you look at the weekly chart, it is really bullish. The weekly chart is bullish up until, I'm going to say, about February last year, just when the share price moved into that downtrend. And the main reason is we saw the long-term highs back in November 2021, and then the next rally, we didn't see the highs get above that high. So it's not really a head and shoulders setup because we don't see the left shoulder here. You could say it's sort of a leaning head and shoulders setup, but not a traditional head and shoulders. And then the share price has moved into a long-term downtrend. And right now, the share price of this company is at a 3-year low. Now, when I had a look at this company quite a few months ago, I thought this company is ridiculously overvalued. Stupid valuation. I had a P ratio of something like 60. P ratio right now is at 31.95 and dividend yield of 2.87%. So possibly, if the bulls are right, those institutions are right, and there's something exciting about this company in the long term, maybe buying this company at a P ratio of 32 is more palatable to me, maybe. But I'll probably have to do a little bit more research on this company to find whether that's true. But definitely, this is not a trade unless you just think of that volume going, oh, there is a lot of buying coming at these levels. And maybe a lot of that buying is those institutions who love this company. Maybe they're doubling down, that sort of thing. Don't know. Retail Food Group, a disaster quite a few years ago. When was that disaster? What year? 2017 into 2018. Oh, yeah. I'll be honest with you, I did hold Retail Food Group back in 2012-13. And to be honest with you, I don't know why I sold, because the share price was on a beautiful uptrend. So I eventually sold. I think I just didn't like their business model. I just don't like franchise business models, and I sold. But if I was more of a technical analysis-minded person, maybe I wouldn't have sold. Anyway, possible turnaround story, just based off the chart, based off the financial results, based off the volume. Now, this period back in the start of 2023 is less concerning now because that's over 1 year ago. If we were in, say, May or June, I would not be bullish at all about a potential uptrend developing in the company's share price. But this is a developing uptrend in Retail Food Group and some really good volume coming in. And I'm pretty sure this is on the back of their financial results. So something to look at when it comes to Retail Food Group. Maybe this is a turnaround story. Markup 184 million. Yeah. Again, this is just me sharing ideas with you. Kathmandu, okay, or KMD Brands, sorry. I think I mentioned this company last week's video because there was a really strong or important support level at 62 cents for this company, and it broke through that without any hesitation, which is actually a bad sign. And that was fairly bearish. And then the company released a negative trading update. I think it was on the Tuesday, yeah. Share price fell 7.8% and it's kept on falling. Share price of this company is now 51 cents. Markup is at 363 million. Dividend yield 11.1%. Price earnings ratio 11.3. I'm pretty sure in their trading update, they just mentioned some difficult trading conditions, particularly because it's warmer than average winter. Funny enough, back in June, July, people were complaining about how cold it was, but they were just talking about the minimum temperatures. The mornings were pretty cold. And when you have really cold morning temperatures, that is a symptom of a really dry air mass. Because when you have a really dry air mass, the temperature can rise and drop more efficiently because there's not a lot of moisture in the atmosphere. And that's why in deserts, you'll see pretty high extremes in temperatures. The min and maxes can be, the range can be quite high because in deserts, it's a dry air mass. So back in the winter, the reason we had really cold mornings was because we're experiencing really dry air masses, which is a symptom of an El Nino. And then El Nino continued into spring. And even though people are saying, what happened to the El Nino? Really wet summer. We saw the effects of El Nino in the spring and not the summer. And now we're coming out of El Nino and possibly we're going into an La Nina. Another reason why we've had a really wet summer, particularly in the eastern seaboard, is because the sea surface temperatures are really high, abnormally high. And one of the reasons they're abnormally high is because of climate change. Yeah, simple as that. Anyway, I think we've got to change the way we look at climate because of climate change. Yeah. And our climate drivers. That's another way to look at climate drivers. Anyway, I've gone off topic here. KMD Brands, possible value. Now, I've seen KMD Brands being brought up twice now in articles related to value investors seeing possible value with this company. But just be aware, they have released some negative announcements. I think a couple of negative announcements in the past few months. So a downtrend cycle, a downgrade cycle. And I have a feeling the share price of this company has never been lower. You can see why that level, support level at 62 cents was important, because that was the share price during the COVID-19 financial panic, and also the share price lows back in July 2012. And the share price of this company is an all-time low. Doesn't mean it's value. Doesn't mean there's value here. But if they can maintain a dividend where it is now, which is another story, 11.1% dividend yield is interesting, but it could be a value trap. 2 companies to go. Now, Walt Disney. So everyone's heard of this company, New York Stock Exchange. So this company, and this is just a possible technical trade, nothing to do with the company itself. It entered my realm of watch lists. It was put onto my watch list back in November when the downtrend looked like it might be coming to an end. You can see November into December, even into January. I think at this point in time, we could say the downtrend was coming to an end. Possible breakout in February, start of February. And I think we definitely have seen a breakout with Walt Disney. They must have released the good results. Share price on the 8th of February rallied 11.5%. So a sneaky possible trading position with this company. Market cap, $200 billion. This would be like the biggest company or close to the biggest company on the ASX, if it was listed on the ASX. And one company to do, a company I own. I did a standalone video on corporate travel management. And the reason I wanted to include this video is because, again, support resistance levels work. They tend to work. Here's more proof. So corporate travel management, on the day they released their results, fell 20%. Share price closed right on a resistance level. That resistance level was just under $16. And again, I don't consider resistance levels as such. It's more zones, so price areas, that sort of thing. And we have seen a share price of corporate travel management bounce off this level. It's now at 16.36. So this is potential bounce or trading play. Where could it bounce to? I have no idea. I just own this company in my quality portfolio. It's still a quality company. And I think the reasons why the share price dropped 20% are just one-offs. They're not structural issues with the company itself. So still maintaining my long-term position in this company. And that's it for this video today. If you have any questions, any thoughts, leave those in the comment section of this video. Look out for the step 1 video. I should be releasing that in the afternoon on the 26th of February. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.